Hi, I'm Alice,
And I'm Greg.
and we're with the League of Women Voters of Kansas City. Amendment 5 is a constitutional amendment proposed by the legislature. It would mandate the phase out of the state individual income tax, enable the legislature to raise state sales tax rates, enable the legislature to subject new categories, including services, to the state sales tax, override three existing constitutional amendments, prohibit reimposition of the state income tax once eliminated. Why is Amendment 5 on the ballot? Legislators already have the power to adjust the state income tax rate. But in order to replace income lost by eliminating income taxes, new revenues from sales taxes must be found. Under the Missouri Constitution, the legislature does not currently have the power to raise sales taxes or to broaden the sales tax base without consulting the citizens. Missouri citizens changed the Constitution 3 times to install these protections. Amendment 5 would override three constitutional amendments approved by voters. The 2016 Taxpayer Protection Amendment, prohibiting sales tax on services that Missourians use every day, approved by 57% of the voters. The 2010 amendment, barring transfer taxes on real estate, approved by 84% of voters. The 1980 Hancock Amendment, which requires that significant tax increases be put to a vote of the people, approved by 55% of voters. In place of those amendments, legislators would be given broad authority to raise taxes and or broaden the sales tax base to include services which are not currently taxed. Let's talk about how Amendment 5 would work. First, the legislature raises more revenue either by raising the sales tax and or broadening the sales tax base to include goods or services that are currently not taxed. After 1 year, the state auditor would calculate the incremental revenue generated from the new sales taxes and determine how much the income tax rate could be lowered, establishing a new top-tier tax rate. The legislature would continue to raise or broaden sales taxes until the income tax rate goes to zero. Once eliminated, the state income tax could not be reinstated by the legislature. There is limited information on Amendment 5. While Amendment 5 would mandate elimination of the state individual income tax, the proposal and its authors do not provide a timeline for its implementation, do not provide estimates for changes to the general sales tax rate necessary to replace revenues lost by eliminating the state income tax, do not identify which new goods or services would be taxed to broaden the sales tax base. Here is a quote from Shannon Cooper of the Greater Kansas City Chamber of Commerce and the Civic Council of Greater Kansas City. It was made during her informational testimony at this spring's legislative hearings on Amendment 5. The vagueness and the uncertainty about what is going to take place gives us great pause. We've reached out before and we've asked to be part of this discussion. We've asked to see plans, specifics, actual tax rates, and what services will be taxed. And as of today, we still haven't seen those. To help us understand this proposal, Greg will walk us through some illustrations.
We will illustrate using the following questions. If the individual income tax is eliminated, number one, how much incremental sales tax revenue is needed? Number two, if we only adjust the state general sales tax rate, how much would we need to raise it? Number three, can we replace lost income tax revenue by only expanding sales taxes to services? And then number four, if the sales tax base is broadened to include services which are not currently taxed, how much would the sales tax rate need to rise in order to offset the revenue lost from eliminating the state income tax? Our illustrations are informed by organizations who have publicly testified regarding Amendment 5 and presented assumptions supporting their estimates, as well as state of Missouri budget data. Here is some background information on sales taxes. In Missouri, the state sales tax rate is 4.225%, composed of an earmarked rate of 1.225%, which is shown in gray, which goes only to specified expenses. A general rate of 3%, which is shown in red, which funds a broad range of state expenses. This is the rate that could change. We will refer to this 3% in the illustrations. In addition, local taxes average 4.19%, which is shown in blue. In total, the average Missourian pays an 8.415% sales tax rate. So the first question, if the individual income tax is eliminated, how much incremental sales tax revenue is needed? Currently, income taxes, shown in yellow, generate more than 60% of state general revenues. The 3% Missouri general sales tax, shown in red, generates only about 23% of state general revenues. Other sources of revenue, shown in gray, generate about 13% of state general revenues. If we want to replace income tax revenue with sales tax revenue, we will need new amounts that are more than 2 times what we currently generate from sales taxes. On the left, the amounts in yellow are revenues from the state income tax. On the right, the box in tan is the amount from new sales tax revenues needed to replace the lost income tax revenue. Number 2, if we only adjust the state general sales tax rate, how much would we need to raise it? In the tan box on the right, we showed that the state general sales tax rate would need to increase from 3.0% to 11.5% to offset the lost revenue from state income taxes. Number 3, can we replace lost income tax revenue by only expanding sales taxes to services which are currently not taxed? Here we show the estimate for the amount of new revenue that could be generated if we expanded the sales tax to include all service revenues except healthcare and rent. That amount is shown in dark blue. Notice that the dark blue box is smaller than the yellow box on the left, which represents revenue from the state income tax. The amount in the tan box on the right is the budget deficit that would be created. In other words, broadening the sales tax alone to cover services would be insufficient to replace revenue lost by eliminating the state income tax. Number 4, if the sales tax base is broadened to include services which are not currently taxed, how much would the sales tax rate need to rise in order to offset the revenue loss from eliminating the state income tax? Here is one estimate using testimony given when Amendment 5 had hearings at the legislature this spring. If we get new revenues from expanding the sales tax to all services except healthcare and rent, we would then need to raise the state general sales tax from 3.0% to 6.4%. Now let's look at how this will show up at the cash register. On the far left, we have the current situation, which we showed before. The 3% state general sales tax in red, the 1.225% state earmarked sales tax in gray, and the Missouri average 4.190 local tax rate. Combined, we are paying a total sales tax rate of about 8.415%. In the middle column, we have the combined sales tax rate of 16.915%, where we raise the sales tax rate from 3% to 11.5%. And if we do not expand the sales tax base to include all the services except health care and rent. Then on the far right column, we have the combined sales tax rate of 11.815%, where we expand the sales tax base to include all services except health care and rent, and we increase the state general sales tax rate from 3.0% to 6.4%. Let's talk about the ballot language about local taxes. The language you will see on your ballot also contains this statement about local taxes. Require local tax rate cuts without reducing school funding if local sales tax revenue increases. Here is a graphic on how that might hypothetically work. In the first column, local tax revenues from all sources before changes to sales tax base is $100 million. In the second column, after the legislature expands the sales tax base on services, $20 million in new revenues from services is generated. Total local sales tax revenue, including the expanded base, is now $120 million. It is composed of the original $100 million in blue and the incremental $20 million in yellow. Under Amendment 5, local governments can't keep the incremental $20 million. Local governments must revert to initial revenue amounts by lowering tax rates on sales taxes, earnings taxes, or property taxes. In the third column, we see how the total revenue is now back to $100 million, composed of $20 million in new revenues from services and only $80 million from prior sources of revenue. Now I'll hand it back over to Alice, who will talk about Amendment 5 and schools.
The Amendment 5 ballot language contains this statement: require local tax rate cuts without reducing school funding if local sales tax revenue increases. While the amendment purports to protect local school funding, it imposes no such restriction on state funding, shown in orange, which remains subject to the legislature. State revenue is about 1/3 of total school funding. Here's the official ballot title you will see when you vote. Shall the Missouri Constitution be amended to require legislative phase-out of the individual state income tax based on revenue growth and authorize the expansion of sales and use taxes, curtail constitutional limits on taxing goods and services, and require local tax rate cuts without reducing school funding if local sales tax revenue increases. Here's the fiscal note, which you will also see on your ballot. The proposal has no direct impact on state or local tax revenue. If passed, implementing legislation will have an unknown impact to state and local tax revenue. If implemented, state government entities expect a reduction of $57,000 annually in income tax checkoff donations and implementation costs of at least $100,000. Here's the fair ballot language, which will not be on your ballot. A yes vote will amend the Missouri Constitution to require legislative phase-out and elimination of the individual state income tax based on revenue growth and authorize the expansion of sales and use taxes, curtail constitutional limits on taxing goods and services, and require local tax rate cuts without reducing school funding if local sales tax revenue increases. A no vote will not amend the Missouri Constitution to require legislative phase-out and elimination of the individual state income tax based on revenue growth and will not authorize the expansion of sales and use taxes. At this time, the impact on taxes is unknown. Pros and cons. What about economic growth? Proponents say cutting income taxes will lead to greater economic growth and greater sales tax collections with no risk of reduced funding for essential services. Opponents say in 2012, Kansas Governor Sam Brownback slashed income taxes with the same assertions we're hearing today. Instead, Kansas experienced sluggish job growth that lagged behind neighboring states, credit rating downgrades, devastating cuts to schools and infrastructure, and budget shortfalls. What about other states? Proponents say Missouri needs to eliminate its income tax to compete with states like Tennessee and Texas, who have no individual income tax. Opponents say Texas taxes the extraction of natural resources such as oil and gas, resources Missouri does not have. Tennessee relies on tourism, levying taxes on out-of-state visitors. Every year, Tennessee has 114 million out-of-state visitors, but Missouri sees just 28 million. Can new taxes on services make up for lost income tax revenue? Proponents say new taxes on digital services and monthly subscriptions will create revenue for local governments. Widening the base of services that are subject to sales tax can offset lost revenue. Opponents say eliminating the state income tax would wipe out nearly 2/3 of the state general revenue budget. To fully replace lost income tax revenue, Missouri current general state sales tax would need to increase from 3 to 11.5%. It would increase taxes on low and middle income Missourians while giving a massive tax break to the wealthiest. Amendment 5 would ignore constitutional taxpayer protections previously approved by the people. Thank you for taking the time to become an informed voter.